let me tee this up. How important is your credit score for you?
Oh, for me, yes,
Yeah.
extremely important. I don't know as of right now in like the states and our culture in the states. Yeah, it's very important for me.
Okay. And so, like, would you say before you buy a house, it's something that you want to get, or like either get it high or maintain it?
Yes.
Okay. What number would you say is probably like a good number that you're striving for?
Um, just keeping my OCDness. I like to keep it above my 750.
Okay, great. So you like to be in that like top percent.
Yes.
So not sure if you heard, but like this past week has been kind of spicy in the real estate industry.
No, I did
Um,
not hear.
there's
Please.
there's like a number of articles that are spinning it. So I'll read one of them for the Washington Post. It's titled "Biden to hike payments for good credit home buyers to subsidize high risk mortgages." All right, I'll break it down a little bit more. Basically, the short of it all, if you have a
Mm-hmm.
high or good credit score, you'll pay more for your mortgage rate than someone with a low credit credit score,
That's pretty effed up. I'm not gonna lie about
right?
that.
So right now it's basically flatlined, right? Like it's pretty even across the board. Like you qualify. If anything, like you may not qualify for certain things if you don't have a good credit score. So you're almost penalized in a way for having a bad credit score. This is going to equalize it a little bit where basically if you have a good credit score, you're going to subsidize that cost for whatever that difference is so that someone with a lower credit score could actually like qualify, get a loan, things like that. Um, and here's the crazy kicker. It goes into effect May 1st.
Oh, so this thing's already passed.
Yeah, exactly. So like it hit the news cycle probably a week before it was going to go live. And yeah, it goes live. I think okay, there's two things that I have on this one. One, all the news articles probably for the clicks are saying that it's Biden's fault. It's a stretch. I mean, it's a government agency that's doing it, which I guess falls under like his government regime, whatever. But it it's clickbait, I think, and that's coming from someone that's a little bit more on the conservative side, you know, like.
Yes.
So I think there's that one piece. Second piece, I like had to really think about it. I was like, okay, like you and me, we both have been watching our credit scores. Do I feel penalized in a way for this? Especially because, like, obviously, I bought a house already. I'm going to be looking for another investment property soon. Like, how does this actually affect me? I'll pause. What are your thoughts on this?
Hearing that, just not even doing any research on that whole getting penalized when you have a good credit score and you have to pay more, which is sounds backwards to me. I want to say the A word because it's freaking backwards.
Mm-hmm.
And if you had a good credit score, then it should have been your I just coming up as a kid when it's like teaching you like, oh yeah, you get a good credit score, you pay less because you're a trusted like what was it? Lender, borrower. You're a trusted borrower. You know you're gonna pay on time, so you get that like lower interest rate, lower. So it gets like, why am I paying more for doing a good job? Might as well do a bad job and get it less and not care. So just to hear that kind of gets me going. Not doing enough research on it because again, never heard about it just yet. It kind of ticks me off because it's just like, why am I working so hard if it's not going to benefit me?
I think that's,
Serious.
that's that's a fair perspective for sure.
But I need to take a step back on why, if it's really going to help, or is there something more grand scheme thing? This is just again very selfish thought process. So what is so on? I'm pretty sure you might have found like a reason being, or you probably agree with me, knowing you probably found like a few little pockets of stuff that grand scheme might explain it. So I'm gonna turn it back to you on what are your thoughts on this?
I think a lot of people in the news are blowing it out of proportion for no reason.
Mm-hmm.
And here's why. When we let's say your sales tax,
Yes.
understandably, it's not based off of like income or credit score or things like that. But it's one of those things where you don't really think about for the most part. It's just like society's tax to buy that hamburger or society's tax to do what you need to do.
Mhm.
I think if you're in a space where you're making enough money to buy a house, or you're like chasing it down to get to that point, or you have like you're in a good situation, because like, okay, those people that don't have a good credit score, buying a house is just like only probably one of the things that they're going to have to worry about, not including however else that's going to affect other things that they have to get right.
Mhm.
I don't know. I think in the grand scheme, I'm actually okay with it.
Okay. I'm gonna kind of pivot to another philosophy of this,
Yeah.
as we talked about way back in our past, and like, what does it mean to buy a car? So, not showing how the structure is, let's go back until, let's say, if the people have to pay less, that who have a low credit score pay less. Does that mean, is do they get forgiven after the 30 year, or is this like a 50-year type of extension payment to make sure that you could pay off the principal? You know, or that's a thought process right there. So if it's less, that means they have to extend out the time, because versus just having a 30-year. And I could see that. That's where it doesn't matter on that point, for because I want to kind of hear you say it, just bring me back to the topic of what does it mean to afford a car? That makes
Let me
sense.
summarize what it is, right? So
Please.
let's say let's say you have $30,000 and
Yes.
you want to buy a car for $25,000. You
Hmm.
could have the option of paying it all out in cash, which then you
Correct.
don't have any payments,
Yep. That's
or
what I was.
you can choose to finance the vehicle, pay
Hmm.
whatever the air quote tax is on interest rate. But during the time that you're paying off that car, if you do something else with that money that makes you more than what the cost of that interest is, then you should totally finance the car.
Correct. Thank you for simplifying that.
I remember having that discussion with you because that's what I did,
Yes.
right? Like I could have purchased my Subaru, didn't purchase it all out in cash, financed it instead. I think interest on it was maybe like 2K, 2.5K. I threw all that money into the stock market, and during the time at which I bought and the market right after it, it did all right. Um,
I Go ahead.
yeah, no, I think that's good. But where's the correlation to that?
I think
Um,
right now. Oh, are you? Is that rebuttal for me, or is that you ready to have things
I
teed
was gonna
up?
say, like, can you tie that back to
So I
the
want to tie it back
mortgage?
because, again, if you're wise with the money, that in that higher like payment shouldn't matter because you're already financially stable enough to make that decision when you're buying a house. So it shouldn't have.
Hmm.
It should not. If you're already strapped already, that's the question of you should even paying for this at that point.
If
If I'm
someone's
ready, if
focused on that
yeah,
piece of it,
mm-hmm. Because if you're already strapped for cash, like if you're like, okay, I already have the money to back it. Just say like you're saved up, you're financially in a sense of like, okay, I made the 20%. I never bought a house before, so correct me, 20, 30% down
for
payment.
down payment,
Yeah. Typically the traditional.
typically they say that you should put down 20%. The reason for that is so that you can avoid your mortgage insurance. However, you don't need to put that.
Hmm.
I put five
Like
percent down
3%.
for
You're
me.
like 3 or 5, right? That's the typical. But yeah, even with that, I mean, that's a lot of money already, just 3 to 5% of a house. But you already know that, okay, I have, for you, I'm pretty sure you can correct your structure, but you paid about 5%, but you also had enough cash on hand to make the monthly mortgages, correct?
Oh, absolutely.
Yes. So you already had that. You already had a lump sum already in the bank versus I'm going to buy it and I'm just going to depend on my paycheck to paycheck to pay for it.
And I think I went into the property a little bit differently than most people, right? I think
Hmm.
if we look on our socials, a lot of people they purchase their house and that's probably the house that they're gonna get married, have kids in, maybe have their kids go to that school district, things like that. This
Thought
property,
process. Yeah.
yeah, this property that I purchased was purely focused on it's going to become, I mean, it's going to go from a single family home to basically an operating triplex. I'm going to be out of it in a year. I'm going to fold something into another property, right? Like it,
Yeah. It's gonna like domino affect it.
yeah. So the focus is very different, which is also why I wanted to be, I wanted to invest the least amount of cash in order to get the highest upside,
Hmm.
right?
Yeah.
If I do think about this piece though, before I purchase this house, the one thing you're always looking at is like, well, how much do I have to save to get over that hump from nothing to something?
Hmm.
Right. And I think this does add a little bit of a friction point for individuals that are in that first saving mode, because
Mm,
in the same way that the interest rates went up, which brought down individuals' buying power, right? So before, for 20,000 down, maybe you could have qualified for, I don't know, I'm not going to do math. Let's say it's 500K, right? Interest rates go up, that 20 down now can buy you 300K, right?
yeah.
So the amount that you could actually buy in that buying power went down already with interest rates. This is going to add one more friction point when you're dealing with those interest rates for the mortgage that people are going to have to figure out. And I think that
Hmm.
level of complexity is where it frustrates a lot of individuals. Is the process is already complicated. Now there's one more piece to also consider. Grand scheme, it's probably going to be better, right? Those who can't, I mean, it takes a while to repair your credit, right? So once you kind of
Hmm.
mess it up, maybe you're on that good path and you're doing everything correctly that you want to do. And this is kind of that, like, just that little bit of help that you needed to kind of push yourself up and keep going in that cycle. I mean, I'm all for it, I guess. Like,
I'm still in save mode, so that's why it kind of got me. I think I was like, dang it, if I have to pay more, then I can't do like. All right, I'm pretty. I was like, all right, I gotta do more research on this.
yeah, it's a very similar conversation to if we were to talk about student loan forgiveness, right? If you were an individual that has student loans, paid them off already, now all of a sudden you're like, that 10K could have been forgiven. You're like, that ain't fair, right?
Yeah,
But it just depends on what side of the coin you're on, really.
for me, it was like I'm still paying it, so that's like 3 more years. No, grand scheme of things, saving house be done in the next like year and a half, 2 years, and then yeah, it's a bit of a for me, I'm gonna take advantage of that. But overall, I think it's such a band-aid fix that I'm just still gonna take advantage of it if it's still happening. Because as of right now, I don't think it will be. So yeah, I never heard anything just yet. So I'm just still paying off my loans and putting it away in a savings account that they say, hey, let's start paying. I'm already cash heavy, so we're good.